Good morning, everyone. Welcome to the morning kappa at 8 on a Wednesday. I will be presenting the midweek futures traders technical brief, and we are on week 4. This is the table whereby we observe what has happened during the week based on the most popular futures product traded by traders. As mentioned the previous week, if you saw the week 4 quotes, mostly markets were trading on neutral, waiting for something to happen. And indeed, when we saw the performance of the recent few days, the markets have actually moved away from neutral. Whether this is considered a very significant move away from neutral is left to be seen, because most of the markets that we are observing here are trading in neutral position and very much trendless in a sense. So there are a few of the products that we saw which has actually moved away from neutral. In particular, we see that silver and copper and also the agriculture product such as the soybean and also the soybean oil. I think point to note, what I see that is very interesting is both the Hang Seng Index and also the FTSE China A50. Both these markets have been trading in the range for in many weeks, and I think when we look at the chart now, we see there is actually a significant move away from the range that has been trading in for the past couple of weeks. For FCPO, this is the popular product that we follow every week. The trend for palm oil prices are still on the uptrend, but there is actually a concern regarding exports whereby the prospects has weakened, and the other bearish factor that has come into play is the production side, whereby production has rose. India too has also reduced their buying after recent price increases, with Malaysia potentially dropping exports of Malaysia palm oil dropping 5% in July versus June. But all in all, as long as the trend continues in this manner, I know we would still recommend that the support is still intact for palm oil. This is the commitment of traders for the US indices. The S&P 500 registered a decrease in estimated of 22,000 of short positions. Both the Dow Jones and Nasdaq had less movement in terms of their positions, with net shorts positions remaining flat. So in a way, it's also reflecting the sentiment of the indices in the US, whereby traders and fund managers alike are a bit uncertain where the markets are going. So this was actually posted yesterday, last evening, the micro Nasdaq, whereby the price have actually corrected from where we were observing, and for this trend to continue, there needs to be a bit more momentum on the downside to hit the support that was actually recommended. So we will actually go into that discussion again. But the news that is actually affecting US markets basically is the US trade policy, which remains a major point of uncertainty for investors and also companies, as Trump self-imposed August 1st deadline for many countries to reach agreements with the White House approaches. And also analysts on the average expects S&P 500 companies to report a 6.7% increase in earnings for the second quarter, with big tech driving much of that gain. So that's the reason why we have seen the Nasdaq been trending well. And at this point, we believe that most of the news have been imputed, and there would be some form of correction in the offing. So this was posted yesterday, and this is the Nasdaq September 2025 contract. The trigger price is 23260. So basically, it meets the target price of 23100 by a mere 5 to 8 points. So this trade basically is still valid. After the rebound, potentially there is still going to be some kind of a downside momentum. So do follow through on the action if you are already in the trade. For the commitment of traders, metals, we saw little position movement. Again, this is a reflection of how market sentiment has actually been reflected, in the traders' action. Gold, copper, platinum, palladium saw nearly unchanged positions on the short side. Only silver registered 3K increase in short positions. So we will look at gold. Gold, basically, what is supporting the gold uptick is the fall in the US dollar. US dollar has been weakening. So that's actually a big sign that maybe the US Fed may be looking at a possible rate cut sometime in the second half of 2025. The prospect of these lower interest rates definitely is putting a bigger bid for gold market, with interest-bearing financial instruments offering less competition for safe haven flows. So in this template, we can see that we are calling for a positive for the short-term chart. Current price is at 3443, reference price is 3410, potential profit price is at 3450, giving a value of 400 US dollar, and the potential loss price of a value of 400 US dollar loss at the point of below the 3370 level. So I've come to the end of this presentation. I'll pass the time to Joseph. Thank you.
Okay, right. Okay, morning, everyone. Thank you, Vincent, on the weekly futures update. As you have heard what Vincent had said, he did mentions that comparatively, the Hang Seng Index do looks more interesting, and he also mentioned about the A50, the ETF index. Right now, what we have mentioned, I think at least for the past 2 weeks, that personally I do see that the Hang Seng is a more stronger index if compared against the US ones. So right now you can see that the Hang Seng has been above the 23,000, and it has climbed above the 25,000 point as well yesterday. And looking at the latest candlestick during the evening session at the night, right, the Hang Seng continue to move upwards. Usually, if during the day, Hang Seng actually went up, right, our traders tend to take profit at the night sessions. But as of yesterday case, we do see that the morning, it was a bullish sessions, and then in the evening sessions, the Hang Seng have extended the upside movement as well. So do see that the momentum is very strong right now at the Hong Kong market, or in other words, sentiment is very bullish, risk on at the Hong Kong market right now. So using the another index that compiled by the Nasdaq, which is the HXC, you do see that the Chinese stock that lists in the US market also have a positive returns as of yesterday. So this is actually the stocks that list in the US market, and Hang Seng evening are the index or the futures that trade in the Hong Kong market. So both traders, right, be the US traders or the Asia Hong Kong traders, both think that the market is positive right now. Right, such very likely this morning that I think Hong Kong will have a positive opening afterwards. And let's take a look at some of the stocks that in my watch list. I think if you look at the overall universe in the Hong Kong market, you do see that the big caps are actually moving. The mid cap, the small cap are almost all actually, I mean, everyone are moving, almost majority are moving so far, right? And what we do see is that one counter that attract my attention is actually the BYD. Now, BYD have attract a lot of news lately, and the stock actually underwent very strong corrections. As of yesterday, it managed to stage a breakout. Afterwards, we look at the chart, and over at the tech side, the smaller cap, such as the Kuaishou, also have staged a breakout. Now, in the Hong Kong market, traditionally, the traders usually favors the commodity stocks. So you look at the aluminium, the coal, CMOC, right, all have actually charting fresh higher high as well. Now, another one is the oil counter. You look at the PetroChina. In China, there are two oil company that listed under the index, right? One is the 857 and another one is the CNOC, right? You do see that both these oil stock have been actually moving upwards, while the international petrol price is actually sideways below $64 per barrel, right? That actually shows that sentiment is actually very bullish at the market right now. So today we'll be looking at two stocks which I think the momentum is increasing its speeds. Firstly, Sinotruk Hong Kong 3808 have staged a breakout, close above 25 Hong Kong dollar. So after the breakout, right, Sinotruk will be testing 26.50 and followed by 28. Downside support is 23 and 50. Secondly, we have the BYD, we break past 133. Just to recall that BYD had a share split about 2 weeks ago. So after the share split consolidations, right now, break past the 133 resistance. Next resistance will be 145, a recent high, and then the fresh high at 155. Downside supports market at 122. Okay, so these are the two stocks that I think give us opportunities this morning in Hong Kong. As of yesterday, right, market is waiting for the trade deals between the US and Europe. Right now, you can see that the Euro market is taking a breather. It's been consolidating for the past two sessions, testing their 20 days moving average. Nevertheless, the support is actually marked at 525, which is the midpoint that we've seen in the April rally, right? As for US, overall technical side remains bullish so far, and if you look at the Trump social media posting, he has mentioned that he managed to strike a deal with Vietnam, Indonesia. The latest one is actually Philippines, that's going to impose a 19% with the market open up for the US. And I think this morning there's another piece of news that Trump also mentioned in one of his speech that he managed to strike a deal with the EU at 15%, right? And so while we are going closer towards the 1st of August, next Friday, right? I think a certain market will be consolidating sideways, but I mean, most of the market will be paying attention to the deals between the major trading partner of US. Yeah. So right now, the S&P still showing a bullish setup, 6,003. They have climbed up 6,003 for the first time, and right now eyeing to test the 6,350. On the downside, support is 6,001 with a strong support at 5,008. So tonight, market will be paying attention to the two company under the Magnificent Seven, i.e. the Alphabet, Google parent company, as well as Tesla. Okay. So these are some of the stocks that in my watch list, nothing much change. But yesterday, we do see some of the counters underwent strong profit taking, such as MSCR, Coinbase, as well as C group, right? But nevertheless, as long as they didn't break the support, we continue to monitor whether they can stage a support, stage a rebound near the support level. Lockheed Martin have delivered subpar results and shares have breached the support, and right now it's showing a bearish setup. Right, nevertheless, I still keep in the watch list in the event that the momentum may pick up again. Now, as for the FKLI, still remain below the 50 days moving average, extending the consolidations. We still keep a bearish showing bias until it break above 1550. FCPO is still showing a bullish setup with strong support at 4001. And these are some of our watch lists. And today we have added two high mobility and eco shop. Right, so right now you can see that the high mobility have break past 180 cents resistance. So after a breakout, right, it's testing the 190 and followed by 2 ringgit. Downside support is 1 ringgit and 73 cents. Then on we have the eco shop, right, which break past 1 ringgit and 30 cents yesterday on the back of high volume. So riding on the momentum, eco shop may be testing 1 ringgit 35 cents, followed by 1 ringgit 45 cents. Downside support is marked at 1 ringgit and 25 cents. So we have two breakout stock this morning, high mobility and followed by the eco shop. So I'll stop here and pass on to Sian on the CPI report. Thank you.
Hi, morning everyone. So we are seeing a release of Malaysia CPI data for the month of June, which was released on yesterday. So basically, the June CPI data come in softer than what we actually anticipated, where for the June, the CPI coming at 1.1%, softer than market estimate of 1.2% as well as our in-house projections of 1.3%. So for the first half of the year, Malaysia CPI remain soft at 1.4%. So we do expect the CPI to actually rose to around a range of 2.4 to 2.6% in the second half. So for now, we still maintain our CPI at 2%. So underpinned by gradual and orderly implementation of fiscal retargeting measures and moderate demand side pressures. While domestic policy actions such as retargeting of raw 95 subsidy, SSD expansion, wage-related adjustment, and restructuring of the electricity tariff may exert some upward pressure on prices. Their overall impact is expected to remain contained, provided these measures are executed progressively and also prudently. And looking forward, so for now, based on the announcement itself, we do see that there might be a further potential downside risk to our current inflation projections of 2%, given that there might be a possible delays in the implementation of RON 95 subsidy retargeting. So based on the news flows itself, it suggests that the rationalization of RON 95 fuel subsidies initially planned for later this year may be delayed to allow for further refinement of the mechanism. So other than that, so SSD expansion of SSD has been implemented in July. So we do think that the direct impact of the SSD expansion on the CPI is estimated to negligible at around a range of 0.1 to 0.2% on a full year basis. So while we expect that there might be some pass-through of higher business costs from SSD broadening to the consumers, but we think that it might be in a limited fashion. So the impact on inflation is anticipated to stay manageable. So other than that, the direct impact of the electricity tariff restructuring, which was implemented in July as well, is expected to be manageable as well. So about 85% of the TNB consumers, particularly those consuming around 1,000 kilowatt per hour or less monthly, will see no increase or even a decrease in their electricity bills, according to the official estimates. So starting July, just to recap that Peninsula Malaysia's electricity base tariff would be increased to around 45.4 cents per kilowatt hour from the former rate of 39.95 kilowatts per hour. So I think hence our base case scenario is still assuming the OPR to be maintained at 2.75 for the remainder of the year, following the last OPR cut in the July's meeting. So assuming that if the GDP managed to stay within the long-term range of 4 to 5%, and inflationary pressure still stay manageable. So just to recap that, officials estimates that Malaysia's inflation for this year is estimated on average at around 2 to 2.5%. So current inflation rate of around 1.4% in the first half is way below the official lower bound of 2% as well. So for the upcoming meeting in the September and November for the MPCs, officials will likely to stay data dependent. So that's all from me. I'll pass the line to the next presenter. Thank you.
Hello everyone. Thank you, Sian, first of all, for the time. So I will be the final speaker for the day. And from my end, we have a results preview note for Bursa Malaysia. The company is releasing its first half results next Tuesday. And we think when it announces, Bursa could post 2Q net profit in the range of 55 to 65 million ringgit. This would be down about 19% to 32% year-on-year and down 5 to 20% Q-on-Q. And if our forecasts, our unofficial forecasts are correct, the first half sum would be about 123 to 133 million ringgit, or a drop of 14 to 21% year-on-year. This would miss or just meet consensus estimates at about 45 to 49% of the street's full year assumption. And on a 90% dividend payout ratio assumption, we think Bursa could declare a 14 to 15 cent dividend per share, which would be a drop from the 18 cent declared in the first half of 2024. So our unofficial 2Q forecasts are mainly premised on a 15% quarter-on-quarter drop in the securities average daily value traded, or SADV as we call it, to 2.4 billion ringgit in 2Q. The first half SADV stood at 2.6 billion ringgit, which is down 25% year-on-year. If you recall, the second quarter began almost immediately with Donald Trump's Liberation Day announcement. And I think since then, risk-off sentiment has been rather widespread. Foreigners were net sellers in both the second quarter and the first half of the year, with the first half net sell value being just under 13 billion ringgit. If you look at the chart, it kind of looks quite egregious. On the derivatives front, derivatives trading also recorded a slight sequential slowdown to about 92,000 contracts per day traded. We think this is in tandem with the decline in average CPO prices during the quarter. But all in all, the first half average daily contracts traded is still above where the 2024 average was. So looking ahead, we think the continued uncertainty on global trade and monetary policy, geopolitical developments, these will all keep securities market prospects dampened and prolong risk-off investor sentiment. Our house view is also for the CPO price to soften half and half, and this could impact derivatives trading as well. But one potential bright-ish, emphasis on the ish, bright-ish spot is the potential listing of one super large cap company in Malaysia. News suggests that this company could be listed with a 30 billion ringgit market cap, which would make it the largest IPO in Malaysia of all time. So while the fees that Bursa will get from the listing isn't super significant, the hope is that there can be sufficient investor interest to provide a boost to SADV and market activity overall, and help to inject some liquidity back into the market. So all in all, our FY25-27 earnings estimates are cut by 1 to 2% as we factor in more prudent SADV assumptions. Our FY25 SADV is cut slightly to 2.67 billion ringgit from 2.71 billion ringgit. And after we roll forward our valuation year to FY26, our target price is raised to 8 ringgit and 05 cents from 7 ringgit 70. But we are still neutral on Bursa for the reasons that I had mentioned previously. So yeah, that's all from me, and I think that's all from my team as well. Thanks so much everyone for joining us today, and we will see you again tomorrow at 8 a.m. Thanks and happy trading. Cheers.